Okay guys, welcome back to Libertas Trading and welcome to the ISM Manufacturing Preview for Monday the 3rd of November 2025. So what is the ISM Manufacturing and why is it important today? So the ISM Manufacturing is the monthly economic report based on surveys from purchasing managers. So the manufacturing sector does only make up 17% of the GDP basket for America, but it's still something to keep an eye on, and it can still move the markets if we get the right numbers. So it should be a bit more important today as well because of the government shutdown. So for anyone who doesn't know, the US government's been in shutdown now for I think 35 days. We've been getting no data at all from the BLS. So basically the market and the Fed are pretty much running blind at the moment. No one's really sure the state of the US economy to a certain extent, and also we're not sure how long this US government shutdown will go on for. So it could be months until we get data again. So data points like this is really important at the moment. That being said, it's a tricky one to trade this. So we've basically got four subcomponents of the ISM manufacturing data. We've got the PMI, we've got prices paid, employment, and new orders. Now, in an ideal scenario, we'd want all of the numbers to be within this range or all of the numbers to be within this range for a trade. But of course, you're going to get times where you get mixes. You're going to get times where, maybe the new orders figure comes in flat, but the employment figure, which is going to be really important today because the Fed are, hyper focused on the labor market, maybe that comes in super low, which will give that a trade. So, these are just rough guideline numbers. And we just sort of we want a massive miss on aggregate or a massive beat on aggregate. We can talk about how to trade stocks a bit later on, but just for now, let's quickly have a look at how the ISM manufacturing's reacted the last sort of 2 or 3 times. So the last print that was tradable, in my opinion, was the 1st of April. So it was right in the mix of that Liberation Day stuff. So it's basically a miss across the board, but prices paid come in pretty hot. Now, the dollar did sell off quite well in this. Of course, it wasn't a perfect trade, and as I spoke about earlier, we're just looking for a miss on aggregate. So, in an ideal scenario, you wouldn't want this number coming in green here, especially above the maximum as well. But, this was quite a big miss in general, and it was quite worthy of a trade, especially with the employment index coming in so low. So we printed almost 3 points below the consensus or the previous. So, this was a fairly good print here. Not amazing and not something I don't think I traded personally, but it was okay. Basically, it's hard to find examples for this. You need all the stars to align for ISM manufacturing, so it is difficult to find examples. So just go into the last print. Apologies, I mean the print before. So again, this print we had a slight miss on the PMI, but nothing special. Prices paid. So this was in October of 2024 when inflation was more of a thing and employment was obviously still a major thing as well. So this reaction here, I'm not really sure why we pushed up higher. It certainly wasn't because of the new orders number, but this reaction here was a bit more like what you'd want to see. But again, it only lasted 10 minutes. So we had prices paid come in real low, employment came in pretty low, PMIs may as well have been flat, and then that new orders came in a bit higher. So again, I'm clutching at straws trying to find examples here because it is very rare that we get a tradable print off ISM manufacturing. But these are the sorts of numbers that can cause these sorts of reactions. So just something to be mindful of. And the one before that was actually last year. So let's quickly head to that. So this one was August of 2024. And, this was a real nice print, to be fair. We had the main PMI coming in below the minimum. We had the prices paid. All right, it came in a bit higher, but it wasn't anything special. The employment figure came in really, really weak. And new orders came in weak as well. So, we did see a bit more of a substantial move here. But still, I wouldn't really want to hold this for too much longer. So, based on these 3 previous reactions, I'll only be scalping data today. If anyone does fancy a longer term trade, fair enough. But, just based on the last 3 reactions and the last 3 movements we've seen, I will be sticking to the shorter term plays on this one. So just head into our tradable scenario plan. So for a dovish reaction, we're simply looking for anything below the minimum. For the prices, we're looking for anything below the minimum on the prices and the PMI, sorry. For the employment, I'm looking for a miss of at least 2 or lower, ideally lower, but a minimum of 2. Same on new orders, a minimum of 2. And then it's the same thing on the hawkish reactions. I'd be looking for above the max on the PMI, above the max on the prices, above 2 on the employment, and above 2 on the new orders. So again, as I said, you're not going to get a perfect print on this, but in aggregate, if the one to focus on today is the employment figure, if the employment figure comes in at like 49 or even 50, for example, but prices comes in a bit lower or new orders comes in flat, it's not the end of the world, but we just want a miss or a beat on aggregate here. So in terms of medium plays, as I said, I won't be looking at any medium term plays from this, and especially with a dovish print, I don't want to be selling the dollar at the moment after the bit more hawkish Fed last week. But for a dovish print, I would be looking at an Aussie US dollar long if I were to be in this. So the Aussie's been strong throughout the European session this morning. We had a solid inflation print last week. We've got a risk of a hawkish hold from the RBA in the morning. We're sat right on top of the 100 daily moving average, and we've found some nice resistance there. Stocks are trading really well at the moment. But of course, the last few weeks have been trading really well. But of course, the risk is that a miss could be bad for stocks and therefore the Aussie as well. But for me, if I'm looking for a medium term play, I don't think the reaction from ISM Manufacturing is going to be too substantial for equity. So I don't think that's too much of a worry. So just looking at the Aussie dollar chart. You can see here we're actually down on the day now for the Aussie, but it is the second strongest currency of the day. So, the euro's a lot weaker, the yen's weak, the franc got smashed earlier, the CAD's looking weak as well. So, it is sort of the best of a bad bunch, the Aussie today. Here's the 100 daily moving average. 100 daily moving average was sat right on top of, and we've bounced off it 3 times. So, this could be a nice little one for some longs. Now, just going back to a hawkish print, I'd be quite keen on buying the dollar at the moment. I'm not going to be buying the dollar medium term from this print, but I would be looking at buying the dollar this week if we do get a few nice prints put together, especially the ISM services, which is a larger proportion of the economy. So I'd be looking at US dollar Swiss franc longs. We had really weak inflation coming out of Switzerland this morning, which has led to the CHF, the Swiss franc, being the weakest on the session. A strong print should also support equities and therefore a tailwind for the US dollar Swiss franc. A breakout of that 80-70 level could be really nice and give us somewhere to keep stops. And then finally zooming out, we can see that there's plenty more upside potential for the pair. So just having a little look at the dollar franc. So as you can see here, we're 0.36% up today. So it is the weakest currency on the day. We're at this sort of quite strong resistance level here, which if we break out of could be quite nice. And we can keep stops defined quite well below here. And then again, just looking back to April, how far we've fallen in the pair, it has got a lot more room for upside. So, this could be a nice one to look at. And then also looking at some cable shorts. So we had the BRC short price index, which came in weak last week. The week before that, we had a miss on the CPI. The UK economy struggling. We've only got 7 basis points of cuts priced in for the Bank of England Thursday, but Goldman Sachs and Barclays have come out today saying they're expecting a cut due to the weaker data. We've got the Chancellor's autumn budget and a big risk for the UK economy, especially looking at GDP after the last one. And technically, we've just broken through solid support and we're now at lows since April with plenty of room to run. So just heading over to the charts there. We can see here we've bounced through that support level. We've retested. We've come back down again. So, that's looking like a really nice sort of break and retest. And any moves down to 130, 129 could be quite nice to looking at. So yeah, we've pushed through this 100 daily moving average as well, which was quite a big level. So it hadn't been broken since April. So yeah, that could be a nice little play. Looking for some cable shorts. Obviously, as I said, I'll just be scalping this. So looking at euro, I'd look to trade the euro either way with a 10 pip target. My preferential play would be the US dollar Japanese yen, which I feel like has been trading best at the moment with US dollar data. I'll be looking for a 16 pip target on the US dollar Japanese yen. So this is what I'll be going for today. So I'll be looking at getting in after about 5 or 10 seconds, either buying or selling the US dollar Japanese yen, and then aiming for a 16 pip target for a 1-to-1 ratio. And then on the SPX, so for stocks, if we get a stagflationary print with everything printing red but prices paid higher, then we expect stocks to fall. So stagflation is low growth but high inflation. So that would be PMI higher, prices lower, employment higher, new orders higher. Sorry, the other way around. PMI lower, prices higher, employment lower, and new orders lower. And then conversely, if we get a Goldilocks print with everything printing green but prices paid coming lower, then we can expect stocks to rise. So that's PMI higher, prices lower, employment higher, and new orders higher. We can look at buying stocks with a 10-point target. So just to show a quick example of a stagflationary print for you. So this was back in August of 2024 on the 1st. This was an absolutely perfect print for stagflationary. for a stagflation environment and for the SPX. So we had the PMI coming lower and below the minimum. We had prices paid coming a little bit higher. We had employment coming really, really soft. And then we had new orders coming soft as well. Just look at the reaction on stocks here. Absolutely amazing, amazing movement. So I'll basically be keeping 2 tabs open. I'll be keeping 4 tabs open. I'll be keeping 1 for all red, 1 for all green, and then I'll be keeping a Goldilocks tab and a stagflationary tab for stocks. So for me today, there'll be 4 tradable scenarios, and I'll be aiming for 10 points on the SPX or 16 pips on the dollar yen. That's just the way I'm going to play it. So always worth looking at. I feel like with ISM manufacturing, it's good to have the options open. You know, it's very rare that we get a print where they all come in red or they all come in green. So it is very handy just having that stagflationary or Goldilocks trade open, you know, just in case we get the right numbers. So just a quick sort of FYI, reactions to the ISM manufacturing have been mixed in the past. So I'll be keeping risk a little tighter on this one, risking 50% of a normal position size. It's hard to know when to enter, but in general with ISMs, if the print is good enough, the market should move in the right direction. So if all the stars align, I'll be looking at entering within the first 5 or 10 seconds. It's well worth taking time to digest all the data. There's a lot of it. So that's all for the preview. Just a little short one today. It's, you know, I'm not expecting much from this, but if we do get it, it could be a nice trade. Any questions, just give me a shout on Substack, and good luck.